So now, because as we have understood the understanding behind why revenue is always credited and why expenses is always debited, we kind of like make a summary of the different accounts and add in expenses and revenue to it to kind of like make a summary of what should be debited and what should be credited. So in chapter 1 we understood that assets is always, to increase an asset we have to debit the account, and to increase liability and capital we have to credit the account. Now we will add four more categories to this. So to increase an expense it has to be debited, to increase revenues it has to be credited. If it's profits, profits are always credited to capital, and if it's loss it would be debited. So that is a summary of how we should be treating assets, liabilities and capital account. And now a breakdown of the profit and loss account, which would be the expenses and revenues. Moving on, we will look through an example of how to record expenses and revenues in a T accounts. So let's say look at some examples. Rent of 200 is paid in cash for each transaction. As we had performed in a previous chapter, we would read the transaction and consider two effects, the double entry effect of it. Rent. Rent, whenever it comes in our mind, rent would be an expense which has to be paid. So rent, and the other thing would be, because it's paid in cash, the other account affected would be cash. So there would be an increase in rent and a decrease in cash. Rent is an expense. So to increase an expense account, it has to be debited. Cash is an asset account, and if it's decreasing, it has to be credited. So rent by 200 and credit cash by 200. If we move on to the second account, so this is the summary of the first account. Moving on to the second expense, it's a second entry or transaction. Motor expenses of 355 are paid by check. Looking at the two effects, one is clearly a motor expense, which is an expense account. The other would be paid by check, which would be the bank account. So motor expenses are increasing, which is an expense account, which would be debited if it's increased. Paid by check means our bank account would be reduced. So if it asset reduced, it would be credited. So in summary, we'll debit the motor expense account with 355 and we'll credit the bank account with 355. Example number 3. £60 of cash is received for commission. £60 cash is received for commission earned by the business. Commission earned, if we just kind of like concentrate on the words, it means the business has earned. So it would be a revenue. And cash is received. So cash is an asset which would increase. So if you increase the cash will have to be debited. So debit the cash account, and commission is a revenue account. So to increase the revenue account, you would credit it. So we would debit the cash account with 60, and then we would credit the commission account with £60. If we were to quickly plot this into our T accounts, so we would debit the rent account and we would credit the cash account. We'll use the same methodology that we used in creating the T accounts. So we would use the first entry, and we would plot a rent account which would be debited, and then we would plot uh, the cash account which would be credited as a result of the rent being paid. So you could further look into these transactions and then plot all of these. The last aspect that we would like to discuss would be the drawings. So now we'll discuss the concept of drawings. What is drawings? We learned what capital was. Capital is any of the investment or cash injections invested by the owner into the business. There might be times where the owner would want to remove part of the money from the business to cover his day-to-day expenses. So the drawings could either be in form of removing cash lump sum from the business or taking actual goods which the business would generally sell. So uh, in that regard, that is the drawings. We'll now look at the effect of drawings on the accounting and on capital. So if the owner removes uh, an amount from the business, this has the effect of reducing the capital. So a reduction in capital, an increase in capital is always credited, so a reduction in capital would be debited. So because of this reasoning, the drawings account is always debited. So we look at the example. On 25th August, the owner takes £50 cash out of the business for his own use. The effect of this would be, we'll first look at the two accounts that it would affect. One would be the drawings account or the capital account, the would be the capital, but generally we would record all of these drawings into a separate drawings account rather than having entries directly into the capital account. So one would be a reduction in capital, which would be an increase in drawings, and then the second would be a reduction in cash. So the action would be, we would debit the drawings account and then we would credit the cash account because the cash is reduced. So here you can see we draw up the drawings account which we debit by £50, and then we would credit the cash account because the drawings was of cash. Similarly, if instead of cash actual goods have been taken by the owner, the effect would be again a reduction in capital and a reduction in stock or inventory or goods. So we would debit the drawings account because it has the effect of the drawings has the effect of reducing the capital, and we would credit the uh, bec- purchases account because the actual stock that we have is reduced. So we will reduce the purchases account by 400. I hope you understand everything clearly in this. And just to revise, revenue account is always credited because it has the effect of increasing capital, and expense account is always debited because it has the effect of reducing the owner's capital. Drawings account is another way in which the capital can reduce, so drawings always debited. So if there is a profit, it will have the impact of increasing credited, hence profit is always debited. If there is a loss, the impact of it would be that the capital would be reduced and hence loss is always debited. Please go through all of the remaining questions and we can discuss whatever issues we would have. Thank you.